Hey, good morning, everybody. Good morning, everybody. Let's wait for some people to get into the room. Let's go over the gold trade that's going on right now. All right. Up a little over $2,700, $2,800. You can see we scaled into this trade here. It's around a $650 risk. But here is the entry right on the, right in that TrendCloud signal, right? We got the signal on TrendCloud. We entered the supply zone also back here. Now, I have this trade. You can take a look at the progress of this trade on TradingView. If you go to my profile, okay. If you go to my profile, right here, the big short on gold. Take a look at that. Take a look at the big short on gold here, and you'll see where we originally, where I originally got into the trade here. So you can see it's all documented here. Got into the trade here. Take a look at what happened, right? Take a look at what happened. So, whoops, come on. Okay, there's the progress there, right? So look what happened. Here was the entry, right? Here was the entry. It started working and then it pulled back and stopped us out right here and just kind of went sideways, right? It just kind of went sideways. Then we got the TrendCloud signal, right? Then we got the TrendCloud signal and I jumped back in and now we are, breaking to the downside. We've got an opening range now that we're pulling back into. So sometimes, it might take a couple of shots at, it might take a couple of tries. You might have to take a couple of tries, but look at where we're at now, over $2,500, and we're pulling back, into the opening range here. Now I left this alone so that I could show you guys what it looks like, and we could go over the process together with all the contracts. Okay, so if I was going to do all in, all out, you can see right here, this was my previous, that was my previous target, and all 5 contracts was $4,300. Okay, so it ended up being around a $650 risk because we took a couple of shots at this to scale into the trade, and that's still, on a $20,000 account, that's still not ridiculous. That's what is that, 3.5% or so, right? So so I could have been all out, right around 8:45 or even actually 8:30 in the morning. Could have been completely out of this trade, but I wanted to record it and use it as a teaching example. So you can see when you have the setup and you have everything in your favor, you've got trend, you've got momentum, and you have that across multiple time frames, you've got something very powerful. Now that doesn't mean it's going to work like immediately. Maybe you get into the trade, it goes sideways for a while, and then takes off, right? it doesn't always work like that. In this case, it kept creeping back, pulled back a little bit. So we took a little bit of a loss, and then set the trade up again, went to sleep, and during the night it came up, hit that entry, right? And let's take a look at what it hit. Let's go to the 1 hour chart, and you can see. Oh, I'm sorry. 15-minute chart. Go to the 15-minute chart, and there it is right there. There's your drop, base drop. That was just above the rally base drop, right? We got in here originally. That was the original, or actually, where was that? It was here, right? We got in here, it pulled back, broke through our supply zone, and then continued sideways. Hit that supply zone right here. Hit that supply zone on the 15-minute chart, and then took off. So what's happening right now? We've got the opening range here. We've got the opening range on gold. There's the opening range on gold. And we are pulling back, and we are retesting that opening range. Retesting the opening range. Look what it's pulling back into, right? It's pulling back into a lot of downward momentum. Trend is down and momentum is down on the high time frame. Trend is down, momentum is down on the middle time frame. So this is like a little fish jumping up into a waterfall with all of that downward pressure. All right. So let's take a look here. This could pull all the way back into the trend cloud here on the 1 hour chart and make a move down. Okay, it's pulling back rather deep. So you can see that we could have been out. We could have been all in, all out, and taken $4,300. Okay, so this is why you want to scale out of the trade. And this is also why, you may want to be all in, all out. Okay, because we would be done. We'd be done with this trade. So if you're going to try and capture a trend, right? You've got to be you want to scale out of the position first, and then leave 1 or 2 contracts on and scale out of the position at that point. This way, this way if you do get a trend, if you do start to trend, then if you start to trend, then great. You will have you will be able to capture that trend. I wonder if I'm streaming live right now. It says I'm live. Where is everybody? Really deep pullback there. Okay. All right. So this is the situation. All right. So we are retesting the opening range, but it's it's much better to use TrendCloud in the overnight session, right? It's much better to use TrendCloud and line up all the supply zones that are going to be available to you. You'll never know which one is going to hit. Just like those Fibonacci lines. You put some Fibonacci lines on your chart. Let me show you here. You put like these Fibonacci retracement lines on your chart. You'll never know which one price will pull back to, right? And in this particular case, it has already pulled back to the 50. Okay, but look where your trend cloud is. It's right here, right at that 618 retracement level. So there's a really good possibility that this pulls back, hits the 618, and then continues down. We definitely have momentum on our side to do that. We've got momentum on our side to do that. So that's the beauty of this. That's the beauty of this. But we got into the trade last night because it hit our supply zone. So we're actually in a very good spot to let this thing run as much as it's going to go. But again, you can see, look at all the profit that's given back. Okay. We had $4,300. Okay. So when you allow price to just do whatever it's going to do, if you really want to follow a trend, then you can't do, you have to leave it alone. That's why it's best to scale out of the position. So if we scaled out, we have got 5 contracts. You know, you can take off. This was the original target and it worked. So what if we took off, 4 contracts at the original target? Great. Then let that last contract run. Okay. So that was $4,350 with 5 contracts of gold. 5 contracts of gold. Whoops. And now we're pulling back to that 618 retracement level. Where's the 618 retracement level? Right in the middle of the 1-hour trend cloud. Let's box it out. Right in there. Okay. And that's where it's heading. The original supply zone is up here. And I think this is really such a great example to just leave things alone and analyze. Just leave the trade alone and analyze it and just see what happens. What part of the trade did you predict? What part of the trade never happened? And you've got to document all of that. And that's what you need to do. If you can do that, if you document this stuff, you will be consistently profitable. It's just experience, guys. It's just experience, gaining experience. And part of gaining that experience is by writing this stuff down, journaling, right? They all do it, man. They all do it. The big hedge fund managers, you better believe that traders in big banks, Goldman Sachs, JP Morgan, people who are trading for large institutions, they want everything documented. They want everything documented. So when you get your TrendCloud system, I do give you a digital trading journal that you can use, and it actually calculates how many trades you took, how many wins and losses. It has the win-loss ratio. You've got everything on there, okay? You've got everything on there with your TrendCloud system. And that's how you're going to rack up the loot. I watched Fun with Dick and Jane last night. Classic Jim Carrey movie. Hilarious. You guys got to watch that. He's like, I'll be back with the loot. Well, this is it, man. You learn how to use TrendCloud consistently. Learn how to use TrendCloud consistently, and and it will end up bringing you the loot. It will end up bringing you the loot. So very, very cool. So let's go over it. Let's go over it real quick. High time frame. Okay, recalculate the chart by hitting that little button. And take a look at gold. Here's gold. Everybody's buying gold. Oh my goodness, everybody's buying gold. Look at what we've got here. Extended trend, right? I want to know when the trend is extended. TrendCloud tells me. Counts the waves for me. 5 average waves. 6, 7. Now this thing is extended. Hey, good morning, Mariana. Good to see you. Now we are extended, right? The trend is extended. We're on the 4-hour chart, and we're saying, holy cow, gold is really extended. I know people are buying gold. I know they want to buy gold. We are really extended. So the idea is, can we get into this? Can we get into gold short during this extended trend process? That's what's got to be going through your mind. Okay, the trend is extended. We need to be conscious of the fact. Hey, Frank, good to see you. Good to see you guys. We need to be conscious of the fact that we've got an extended trend here. Okay, so that's when the news. Okay, that's when the news goes out the window. Okay, because you've got this extended trend, and you've got people in the news. They're yelling and screaming, "Oh, gold! Everyone's buying gold!" And then you see these commercials. Hey, buy gold from this company, and that's fine. That's fine. But this is mass psychology of actual people doing stuff. Okay, this is large institutions. This is people, retail traders like us. Everybody. This is a calculation of everyone. Why wouldn't you listen to that? You've got to take that into consideration. Yesterday we recorded a lot of news flashes, right? We had all those news flashes popping up, and we already knew. We already knew what was going on, right? It was like the Fed meeting came out, all this negative news and stuff. We saw it. And we were calling the shots as it was coming up. Like, yeah, we know that. So, so there you go. So on the 4-hour chart, what's happening here? We can even take TrendCloud off for a second here. Classical charting pattern here, right, guys? Here, just grab a trend line. I mean, it's pretty easy to draw this, right? Everybody can see that. What do we got here? Okay. Looks like gold is selling off for some strange reason. Oh, maybe it's because the trend is extended. Okay, so people, want to buy gold. These big institutions, they want to buy gold at the best price. Now you can start drawing these, these high time frame demand zones, right? And they're pretty easy to see. Got there, here, here. Okay, so we've got 3 points. Now let's throw in, some major levels of moving averages. Look at this. Here's the 100 simple. Well, doesn't that look suspicious? Like, hey, price, come on down. Let's meet up. That's what moving averages do. They're like magnets to price. And this, the 100 simple is saying, let's meet up. Let's meet up. Here's a nice demand zone on that 4-hour chart. Price going to come down, hit that demand zone. If we stay in the trend with all 5 contracts, that's $14,000. That's $14,000. I kind of want to use this as an experiment and just leave everything alone until we hit that point, that major level, right? Because we are in a downtrend, and this is what Richard Dennis was trying to explain during the 1980s. Richard Dennis started a trading experiment, and he was teaching people of different backgrounds, all different job types, all different vocational backgrounds. He was trying to teach them how to follow a trend in trading. He's trying to teach them that. And it was really interesting. They had some very interesting results. And I would look that book up. It's called The Turtle Traders. And there's a lot of YouTube videos on it. Guy's name is Richard Dennis of The Turtle Traders. And they were trend followers back in the 1980s. And they did stuff like this. So it's pretty cool that we've got a group of our own. And the turtles, yeah, that's right. That's right. Yep. That's it. Those are the guys. So what are we, the trend clouds? I don't know. Yeah, so that they would get together, and boy, wouldn't that'd be so exciting to be a part of something like that, and a lot of them could not follow the rules. So that was a big discovery in itself. What the heck is this? Chat GPT? Okay. So that in itself was a really interesting fact, was that these guys had a lot of trouble following the rules. So, what are our rules? What are our rules? We want to make sure that we've got trend and momentum. Okay. Using TrendCloud, we're using for the trend. Cycle indicator, we're using for our timing. Momentum, right? This momentum filter we're using for momentum, all on the high time frame, right? We want to make sure that we are using that, right? We want to make sure we're using that. That's one of our rules: high time frame, trend, and momentum, right? Then you go to the middle time frame, and we're using that CCI indicator for the middle time frame momentum. So now you can see, oh, okay, trend cloud is red. We're cycling down. Momentum is red on the high time frame. Oh, good. That's the context that we want to see. Here's that big reversal taking place. Big reversal taking place on the on that opening range. Right down here is the support. Okay, so that's what we want to see. That's what we want to see. Why don't we take out? We're shorting, so we want to buy to cover. Why don't we take out 3? Can we do that? We'll take out 3. Take some money off the scale out of the position, right? And then we can carry the rest of that, down to here. But we want to make sure that we capture some money, off of this. All right, so right here, trend, momentum, middle time frame, trend, momentum, high time frame, all in alignment. Okay, so then you go to the lower time frame, the lowest time frame, and you start looking for supply and demand zones. And that's what we did. We went to that middle time frame. We saw one right here, right? It pulled back, it stopped us out, and then we saw another one formed, right? We had another supply zone form, and that was right in here. Okay, so where did that go? Where was our pulled back and actually hit that TrendCloud support, TrendCloud resistance level there. And we got the TrendCloud signal as well, right? TrendCloud signal as well. Little consolidation area on the 5-minute, right? Rally-based drop came really close to that original entry point there. Okay. And again, all of that is here it is, the big short on gold. Click onto that, and you will see the original entry and what happened here, right? There's the original entry. Right there was our stop loss, pulled back, stopped us out the first time. So we got stopped out the first time, and we said that, I mean, there's too much momentum and trend to the downside. Okay, it wanted to pull back a little bit further, no problem. Pulled back a little bit further, and that is where we took it again, right? We saw some TrendCloud signals, and we said, let's get in there, jump back in, and there we go. Okay. So on the opening range, 15-minute chart, pulls back deep, right? Down, pulls back deep, and continues to move down. So it kind of pulled back into this little pocket up here. For the move down. Oh, we got a couple of people here now in on the YouTube channel. All right, excellent. So there we go. So we're pulling back down. Full contract of gold. You can see now how exciting it is when you catch a trend like this. TrendCloud gave us the signal here. And actually it gave us the signal right here. Okay, now that's 3:30 in the morning, but we had this set up already. Okay, we had a supply zone set up already here, and we knew it's probably going to take place maybe during the night. We set it up. Our risk was fine, and we accepted the risk. So here we go. Here we go. We're going to capture. We're going to capture 3 contracts here. Okay. And we'll continue to scale out of this all the way down. If it makes all the way back down to that 100 simple. All 5 contracts, if we leave all 5 contracts, that's around $14,000. Okay. Your money is already leveraged in the futures market. That's the appeal to all of this. Okay. So if you're able to use TrendCloud efficiently, there's your $14,000 move in a couple of days. I mean, making $14,000 in just 2 days is very appealing. So, so that is the goal, right? That is the goal that we all want to get to. All right, so it's going to do its thing, and we want to capture, and we'll take off 4 contracts, and we'll let one run as far as it's going to go. We'll let one run as far as it's going to go, because we do know that gold tends to whipsaw, right? And that's our trend line support line right there. So comes down. I have it just above that trend line there, just above, front running the trend line support level. All right. $650 risk on the full contract, up $3,700. We even got the previous day's low here. ADR checkpoints, my goodness, they are all the way down here. All the way down here, ADR checkpoint, okay? Okay. Let's see what else is going on here. What's going on with copper? Okay, copper. High time frame, extended trend. 5 waves, 3, 4, 5th wave right there, pulling back. And we just have to assume that it's going to continue the move up. Momentum on the middle time frame is down. And we are breaking through to the upside on the low time frame, on the 15-minute chart. None of that makes sense, does it? Let's see, we're in an uptrend. Yes, the trend is extended, but we're cycling up and momentum is up. So we've got up, up, and up on that high time frame. Middle time frame is down and momentum is down, right? Trend and momentum is down. So we are in the middle of a decision. Is it going to continue down here? And there's really nothing down here on copper until we get back to this. Isn't that interesting? Right here. This is all consolidation. That's all consolidation with that 100 simple moving average component. So does copper want to correct down to here? That's a ways away. Breaking out to the upside. All this is mixed signals, right? I want to make sure that you guys understand that you're seeing mixed signals here. High time frame is up, cycling up, momentum is up. Middle time frame is down on the trend and momentum. Okay, so that's mixed, that's opposite. And then the 15-minute chart, we're breaking to the upside. All right, so it's like the low time frame. The low time frame is fitting the narrative of the high time frame, but we don't have that middle time frame component. And therefore, it's best to walk away. Simple as that. Simple as that. Trend is becoming extended on the middle time frame. So maybe this wants to pull back up here, recalculate, and then continue the move down. We've got a market edge here. Oh, and we also have an ADR checkpoint. Look at that. Here's the second one here, first and second one. Oops. And what do we have here? Well, let's box it out. Let's box that out and then look at it on the low time frame. What does it look like here? What does it look like? Drop, base, drop. See that? Here's your leg in, drop. Actually, well, no, because this closed above. This candle closed above. So this is a drop and a rally and then a big drop. So, yeah, just consolidation, right? Nothing's going to be perfect. You can see this is a market edge here, but technically you understand, right? This rally candle, right? That's okay. If you want to say rally, this is not a basing candle because we closed below the range of the leg in. Here's a rally candle. This candle closed below that leg in. So it's just kind of a drop and a rally, a drop and a rally. It's not really a formation, right? The formation looks like it's back here, right? These small candles here. And that's not very powerful looking, is it? You know, rally base, drop, maybe, right? That right there. And it looks like it just missed it, right? So we can draw it like that. We can draw it like that. And that's pretty significant. So this is a significant area here where price could return to. And we would, you know, we would watch that closely. But that's not where we're at yet, right? So this is pulling back, heading towards, what are we heading towards here? Drop, base, drop right here, definitely. That is definitely a drop, base, drop. Rally, base, drop right up here. Okay, so we've got some level. Which one is it going to be? Or is it just going to rip through all of it? You never know. Okay, that's what you got to get comfortable with. That level of uncertainty, we never know what point it's going to pull back to. Okay, maybe we can get some Fibonacci lines. Grab your Fibonacci retracement, swing high to swing low. And you can see, okay, well, we've got the 618 retracement level. That's very close to this supply zone. And we've got the 786 and the 886 sort of outlining this right here. Those are usually levels of trend reversal. Okay, so that's one way that you can use your Fibonacci retracement tool. That's this one right here. Okay, Fib retracement tool. If you've got 3 supply zones that are in question and that you're liking, you say, okay, I got 3 supply zones here. Here comes price. Which one is it going to be? Go from swing high all the way to swing low, and outline everything with those Fib retracement levels, and you'll see, and you will see. So very cool. How's our gold trade doing? Just missed it. Just missed it. So we're starting to go a little sideways here on gold, right? Starting to go a little sideways here on gold. Retesting the opening range. Retesting the opening range a couple of times. We're kind of forming a higher low, right? So we're getting some pullback. We're getting some pullback here, but we're still inside of this supply zone here, right? Here's a supply zone, could very well bounce back and forth and continue down. We have to treat it that way because that's what the charts are telling us. We've got to trade it that way because downtrend, cycling down, momentum is down. Middle time frame, downtrend. All right, we're cycling up here. Okay, so we could be capturing this corrective move, but look what it did. It totally did what we said it was going to do. Where did it pull back into? It pulled back into that 1 hour trend cloud right there. That's what we boxed out here and made a move down. Trend cloud, right? It told us. We called the shot. We called it. We said it's going to pull back, possibly pull back into the trend cloud and make the move down. Right? Here's the move down, pulls back into the 1 hour trend cloud and makes the move down. That's what we're looking for. See, so your trend cloud mapped that out for you. And you have a chance of this heading all the way down here and hitting that 100 simple moving average for a grand total prize of $14,000. So, you want to be able to take advantage of stuff like that. All right. So that is the story. Let's see if we can find some more. All right. Wow, I can't believe it. Just missed that entry. Let's check out S&P. Check out the S&P here. Sideways, right? When you see your trend cloud signals, when you see the trend cloud crossovers like that, those plus signs, those black plus signs, when they are lined up and squished together like that, very easily you can say, okay, sideways, right? Sideways movement. So if you see sideways movement like that on the highest time frame, I mean, is that really the best thing to trade? Nah, not really. Don't really want to be a part of that. You can make observations, pulled back, hit that 100 simple, and bouncing off of it. Middle time frame, pulled back into trend cloud, and looks like it's, going up. We're forming the opening range here, pulling back deep into that 1 hour trend cloud. Let's box it out. Okay. What's that look like on the 15-minute? Aha. Just look left. Structure leaves clues. And we've got something right there, right? So we've got this sweet spot right here. We've got that sweet spot right there on the 15-minute chart. So we've got trend on multiple time frames. There you go. Opening range, pulls back. Maybe this is a bear trap, pulls into that area, makes the move up. How far back is it going to go? We don't know, but this is definitely an area of interest. Let's make it purple. So this whole area here is an area of interest. Now, we have trend on multiple time frames, but we only have the momentum on the middle time frame. So what does that tell us? Maybe this is short-lived, right? Maybe this is going to be short-lived. ADR checkpoint, all the way up there, right? This thing has not moved very far. This has not moved very far. So there is a potential. Wow, ADR checkpoint way up there. This thing has not moved very much at all. Kind of just going sideways here. It's probably like that on all of the indexes. Same thing on the Dow. Same thing on the NASDAQ. Russell is a little weaker, right? Russell is down, pulling back into that area. Let's get rid of all of that. Let's redo this. So the Russell is pretty weak. We're popping up. Haven't crossed below, right? So the Russell is all over the place. I mean, oh my God, look at that. Look at the indecision here on the opening range. If I had to take a guess, I'd say it breaks to the downside because of all of this, right? You've got downtrend, cycling down. Momentum is starting to head down. We've got bullish divergence, meaning we came down, hit the 200, bounced off of it. And then when we went past it and we continued that downward motion, we had less momentum. So there's a lot of buyers in here. So I think maybe this breaks to the downside. We come in contact with a bunch of buyers, right? Take the value of that very last candle, something like that. Maybe that's where it stops. But again, if you put yourself into a mindset of, hey, I'm going to guess. See, we're guessing. See the difference between guessing and following the trade plan? You'll make observations, especially when you start getting better at this. You're going to start making observations. Are those observations a trade plan? Are your observations a trade plan? Or, so when you make an observation, what you're doing is you want to make sure that the observation fits the narrative of your trade plan. That makes sense, right? Okay, we're coming down into a demand zone on the high time frame. And we've got all this bullish divergence. Those are observations, right? How is that going to fit our narrative? Well, being that we're in a downtrend, if that breaks below this area, then we can start looking for shorts. But if it comes down into here and we get a reaction off of it, this could be the first area of trend reversal. And what we would do, again, on that lower time frame, here's the area, right? We would look for that reversal pattern, right? I'm going to draw that reversal pattern every time we meet because I think it's important. forms the, right there. There's that W. Here's your low. Here's your higher low. Here's your break of structure. That's the low time frame reversal pattern that you would look for inside of that high time frame curve zone. Or that, when I say curve zone, I mean market edge, right? High time frame market edge, curve zone, it's the same thing. High time frame demand zone, same thing. That all means the same thing, right? There's your high time frame demand zone. That's the pattern that we would look at, right? To say, okay, there we go. You can take it aggressively right there. You can take the entry right here aggressively, take it right there. Or you can wait for that to happen. And then what would you do? You take the retest of that breakout for the move up, in which case you would take the trade right here. Okay. This is the aggressive entry. This is the conservative entry. Pretty cool, huh? Yeah, so that is what you would follow. And that structurally, that would be your first go at the trend reversal. And then hopefully on your middle time frame and high time frame, you start seeing that momentum shift. You start making those observations. Aha, price is breaking above the 50 simple, right? We're getting closer to CCI. CCI is starting to break above positive 100. We're cycling up, right? This, you get a hook up on K here. Momentum is green. It's already green, you know? Okay, Frank, no problem. I will see you later. Thank you for attending. All right. So, so that is what we would look for. All right. How's the gold? How's the gold doing? Wow, gold pulled back really deep. Gold pulled back really deep. Let's take a look. What the heck is going on here? Starting to get a momentum shift here, right? Starting to get a momentum shift. We're making some observations. We are making some observations here. Let's clear the chart. All right. Pulling all the way back. Does it pull all the way back into pulling back into that 1 hour trend cloud? Really nice rejection off of that. Cycling down. We are at the very beginning of this downward cycle here, aren't we? Very beginning of this downward cycle on the 4 hour chart. Let me see here. Yeah. We've got the previous day's close. Really likes to bounce out of that. Down. We are definitely definitely have that 50 simple is down. But look at all the profit that got given up, right? When you don't scale out of the trade, look at all the profit that got given up, right? We had all 5 contracts right here, right? We had all 5 contracts right here as a level, and the trend is reversing on us, right? The trade is reversing on us. So that's why you need you need to scale out of the position, right? If you don't scale out, you'll see this happen. And that's why we capture it in the simulator, right? We've got to have an understanding of what could happen. So when you have an understanding of what could happen, now you can protect yourself, and it will be visceral, right? It will be internalized, and you've got to see it happen. You've got to see it happen on the chart. All right. And that's what the simulator is for. It's for making these observations, writing them down, okay, and coming up with the best plan. And that's what you do. That is what all of this is designed for. So, yeah, and what do we have here on the high time frame? Here's a low. Here's a higher low. Higher low. So we're kind of climbing out of that, right? Got that wedge pattern going. You can see it here too. A lot of buyers in here. You can draw it like that. Encompass all of those buyers. Pulling back, retesting this area here. Retesting this area. So this is a great lesson for choosing targets to scale out of the position. And again, that's what the simulator is for, learning. And that's what we do here. We are here to learn. We are here to learn. And this is the only way, this is the only way to greatness is to learn in the simulator. And that's what we're teaching here. So if you're new to the channel, if you're new to TrendCloud, this is what we do. We analyze our trades in the simulator. We take these notes, and then when you are ready, you apply everything to the live market. This is the only way you get there. This is the only way you get there. Learning a new system and just jumping right into the live market, I think could cause a lot of stress and a good amount of damage to your account. So we don't want to do that. All right. Mixed signals. Mixed signals on the indexes. What else? Hey, let's take a look at platinum. Downtrend. Downtrend. Breaking out to the upside. Okay. Momentum is up, and momentum is very close to that positive 100. So we are in a corrective move here on the high time frame. Corrective move on that high time frame, pulling back. Where could this pull back to? Could pull back right here. That looks like an area of interest. That looks like an area of interest. I mean, you even have the 200 here. So does it bounce off of the 200? Well, we've got some moving averages here, right? We've got the 100 moving average, 100 simple, and we have the actual trend cloud, right? This whole thing here is the trend cloud. And that's the movement of this thing. Pulls down, pulls into trend cloud, makes another move down. That's what we're looking for. What does that look like on the middle time frame? Drag it to the right here. Don't really see anything. Okay, we've got some levels in here, don't we? We've got this little drop base drop. We've got this right here. That is standing out to me right there. Drop base drop, pulls back, hits that area. That is a very interesting area right there. That could be a turnaround point. So as this is pulling back, we could hit this level, this formation, to continue the downtrend, right? Momentum is against us right now because it's correcting, right? We're making this corrective move. So all of this momentum acts like a force with that upward movement. It's like a jetpack, right? And the jetpack has to run out of steam before it reverses, right? Because maybe it wants to take you all the way up to here. We don't know. That's why we wait for a reaction, and then we wait for that shift in momentum. And in order for all of that to take place, there's got to be some consolidation, right? There's got to be some consolidation where this thing huddles around here, consolidates, and then we get the momentum shift. Then we start looking for those demand zones. But to be aggressive, you can set the trade. You can set the trade right here and be aggressive. Okay, $195 move. And you can just leave it alone and you can take that risk. All right. So great job. I'm glad we got to see. I'm glad that we got to see everything take place, right? Today's lesson is really all about the importance of setting. What is that? There we go. Okay, so gold reversed all the way back, right? Gold reversed all the way back. So we made over $4,000. And if you don't take a target, there you go. Deep pullback, reversed all the way back. How many times has that happened to you? Right? So I'm glad that we got to record that, because this is the importance of scaling out of the position, okay? Scaling out of the position and taking targets. That is firsthand. We got to capture and see it. So this is a great video to watch to show you how important it is to take targets and to scale out of the position. That was over $4,300 at our target, okay? And if you don't take it, you could get those deep pullbacks, and that's what could happen, okay? So I'm glad that we got to capture all of that. So definitely save this video, use it as a reference, and good job. All right, everybody. Well, it's 10 o'clock. And I will see you guys tomorrow for another group meeting. And if you're interested in TrendCloud, just go to my profile right here. Go to the profile, and you can click onto the link right here, and it will bring you up the trade plan. Trade with us for a couple of weeks. See if you like our style. And by all means, you can join TrendCloud. And you can enjoy one-on-one coaching and group meetings as well. All right, everybody. I will see you tomorrow. Cheers.